6-year highs. And really all the usual suspects in play today, not least of all BHP.
Carsten, that's exactly right. We really are seeing a strong performance from BHP and a lot of those iron ore stocks as well, even though we did see that iron ore price falling off slightly overnight. But really that materials sector is the best performer on our market today, up about 1.25% at the moment, although it has been trading even higher than that. So really that is pushing our market higher. And as you say, we've reached these fresh 6-year highs. And we are really seeing all sectors trading in positive territory today. Following the materials sector, we're also seeing property up about 1%, consumer discretionary also doing very well, and also that energy space also up about 0.7%. Of course, we were keeping our eye on that inflation data which came through, and that really drove that Aussie dollar up, and we saw it jumping up about 50 basis points or so. Of course, we saw it coming in mostly in line with expectations. We didn't see much movement in the market, but overall a very strong performance today.
Soggy one for SFR, that is to say Sandfire Resources. A quarterly report today doing nothing to ignite its fortunes.
It's been an interesting performance today. It's currently trading down, well, when our last looked, but it has sort of been playing in positive territory, going back and forth. So I think the market is sort of undecided in terms of how to react to this production report. So looking at their FY14 copper production that came in relatively in line with expectations at about 68,000 tonnes. Their FY14 gold production came in at 34,000 ounces, but that was slightly below guidance of 35,000 ounces. But I certainly think it was their costs that probably disappointed. They came in higher at $1.18 in comparison to guidance of about $1.15, and that was in fact at the top end of their guidance range already. So I certainly think those costs were disappointing. But as I said, investors sort of seem to be reacting in some ways positively. We did see that the company is continuing to pay down their debt. We saw them making repayments of about $30 million in terms of their debt, and that their debt is now in fact down to about $160 million with cash at hand of about $58 million. So it certainly does look like their balance sheet is getting stronger, potentially for some sort of future dividend payments to shareholders, but certainly an interesting one today.
Yeah, MS upgraded that stock earlier this month to 720, the price target on it from 705 up to 720, so certainly looking towards not only what you've just been talking about, but also new contract wins, underground mining contracts at the DeGrussa copper gold mine, probably with a value of about 200 mil, which are only net positives. Bigger picture, Sims Metals going into a strategy session, coming out and telling the market 5 years will be a completely changed entity. Come on board, and it seems that's resonating.
Exactly right, and we are seeing investors reacting very well to this news today. Of course, we know for Sims Metals, they have been coming under quite a lot of pressure sort of over the last 5 years or so. Back in 2009, it was trading above $28, now back all the way down to around $10, $11. So we do certainly know it has been struggling as a result of that downturn in that metal recycling market, as well as a weak performance across a lot of its US and UK businesses as well. And of course, recently we also saw it flagging that $115 million write-down in its UK and Canada operations. But of course today we have seen this 5-year strategic review coming on board, which is hoping to lift earnings by improving their sort of global operating portfolio. So it does certainly look very positive and really provides a positive outlook on this stock. They do plan to lift their earnings by about 350% above that FY13 result, where we did see them reporting a loss of about $466 million. So certainly does look very positive. And certainly in addition to this, we do also think that the stock is quite highly leveraged to a recovery over in the US. It's backed by a pretty strong balance sheet as well to support some of that growth. And we do certainly think it's trading on quite cheap valuations at the moment. So it's on an earnings multiple of about 6 times for FY15. So it's on pretty low levels at the moment. We do think that it's looking quite, good value in terms of some of that potential future upside.